how it's going. Setting it up. All right, you're good to go.
All right. Good morning. This is Bill Feely, and I'm here with MSATP TV, and we're live this morning with Jim Harney. Jim is our legislative consultant, and he monitors the legislation down in Annapolis for us to let us know what all is happening, and gives us weekly reports on the bills that have been introduced that affect the accounting profession. So I'm going to turn it over to Jim for a few minutes and let him introduce himself and tell us about what the exciting things are down in Annapolis this year. Jim?
Good morning, Bill, and thank you for that introduction. This session has been unlike any other that I'm familiar with, and that's probably because, if you recall, last year they started live, then COVID came into being in March, and then they adjourned 19 days early of their 90-day session. This year, they're entirely remote. You can't get into the buildings and so forth. The House chamber is 141 members, and their desks touch each other. So 71 members of the House are in the chambers when they have a floor session, and 70 members are in a different room watching virtually, but have the capability to speak, vote, et cetera, from that standpoint. So far this year, the Senate has introduced 948 bills. The House has introduced 1,363 for a total of a little over 2,300. This time last year, there were 2,700 bills introduced. So you can see there's a slight decrease. And the Society has reviewed 173 bills during this session. That's 7.5% of the total bills that were introduced. Last year, this time, the Society had reviewed 221 bills, which was 8%. So percentage-wise, still stand about the same. I want to touch on several bills. Some of them won't go anywhere, but I just think it's important that your members know that these are the kinds of bills that are being introduced and so forth. And one other thing before I start that, there are a couple important dates that occurred during the legislative session that are important. And you'll see this in my comments, or it'll become more clear. Each year, there are two dates that the House and Senate bills must be introduced by. And any bills, any House bills and Senate bills introduced after that date have to go to Rules Committee. And why is that important? Because the Rules Committee, that delays the process, delays everything thereafter. Sometimes the Rules Committee will just sit on it and not even act on it to bring it up to the floor to get assigned a committee and so forth. And the second important date is every year there's a specific date that is a courtesy date that the House bills that they want passed, they will be passed and moved to the opposite chamber by that date. This year, that date, magic date, is March 22nd. That was 3 weeks from yesterday. So if they put bills that the House passes and moves to the Senate by that date, they would like to get passed, and vice versa. The Senate bills that need to get passed and move to the House so they can have their hearing and pass them occurs on March 22nd. Well, the first bill I want to talk about is House Bill 148. This is the Personal Information Protection Act. This law was enacted several years ago, but this is making a couple of revisions to it that are key. It reduces from 45 days to 10 days after the breach becomes known to notify the affected individuals. And if the breach gets investigated, say by a police department or something of that nature, and you don't have access to your computer systems and so forth, that 10-day clock doesn't start ticking while that investigation is going on. But once that investigation is concluded, then you have 7 days to notify the affected individuals. And you also this year, or this bill would require you to notify the Office of the Attorney General in writing a description of the breach of the security system, including when and how it occurred, any steps that the business has taken or plans to take related to the breach, the form of notice that will be sent to the affected individuals, and a sample of that notice. For example, you may, some clients, you may have their full address, some you may not. You may have just talked on the phone, but you've got their email address. So if you're sending a letter to individuals that you have their address, you would have to send a sample copy of that to the AG's office, and like in an email, you would draft a sample copy containing all the required information that would be necessary. That bill did pass the House and is moved to the Senate, and so that tells you that they want that bill passed this year. So in all likelihood, this will get approved by the Senate. The second one has been heard, but there's no action, but I thought it was interesting. It was a bill for subtraction modification for centenarians. If you reach the age of 100 each year that you're 100 or older, you would get a subtraction modification of $50,000 so that you didn't have to pay tax on that. But unfortunately, there's at this stage, no decisions have been made on that bill. The third bill is House Bill 733. This was Governor Hogan's bill. There's one in the House and one in the Senate, but it's a very expensive bill. This would also provide a subtraction modification, and it's geared to retirees, because there's a lot of retirees that once they retire, they leave the state of Maryland and they go to tax havens, whether it's Florida or South Carolina, where you can get more bang for the money that you have, and so forth and so on. And it would have been phased in, or would be phased in, over 5 years. The criteria is the taxpayer must have federal adjusted gross income of $100,000 or less.
Okay.
And they must, and is receiving old age or survivor benefit under the Social Security Act, or is at least 65 years old and is not employed full time. And like I said, it would be phased in over 5 years. Tax year 2022, you'd be able to subtract 10,000, then 2023, 20, 30, 40, and then until it reaches 50,000. But it's got a big price tag on it, just the 10,000 level for tax year 2022. When you file your returns in 2023, that would cost the state $111 million. And it just goes up from there, 215 million, 287, 340. So the likelihood of that bill passing with that kind of a price tag is very limited.
Okay.
Another bill that we need to watch is House Bill 923. This is a worker safety and health injury and illness prevention program. And this would require each employer with 10 or more employees, or whose rate of work-related injury and illness exceeds the average incidence rate of all industries in the state, as determined by the commissioner. And what this bill would require, each business would have to appoint a worker safety and health committee. It would consist of equal number of management employees and non-management members. The committee would have to meet regularly, but not less than quarterly. And the committee would have to prepare and make available to the employees of the business written records of the safety and health issues discussed during their meetings, conduct periodic inspections of the workplace to try to identify areas that may be something hazardous and recommend how to correct it and so forth. And then if the commissioner reviews or does an investigation due to occupation accidents and causes, they must review that area and then provide management with recommendations. So I think we need to obviously watch that one pretty closely.
Mhm.
And that bill is being heard this week, the 5th, March the 5th.
Okay.
Another one that's come up is House Bill 1161. This is another subtraction modification for school supplies. It would be up to $250 of expense paid or incurred by a parent or guardian of a student in K through 12 during taxable years, and this is the tricky part, 2020 and 2021. And here we are filing 2020 tax returns this year. For school supplies used by the student, and the supplies would be such things as computer equipment, computer software and services, material used for virtual learning environment, athletic supplies purchased for health or physical education classes. So we'll have to continue to watch that. That's also being heard actually Thursday, the 4th.
Okay. Now, with this subtraction modification, would that be part of that 502 LU form, or are they going to amend the subtraction modification that's already existing?
I think it's would amend the subtraction modification that's already existing.
Okay. Thank you.
House Bill 1171 is also, this one is being heard next week. It's a labor and employment Maryland Employee Protection Plan for vaccine refusal. What this means is that an employer may not terminate an employee solely on the basis of the employee's refusal to receive a vaccination against COVID-19, but then notwithstanding any other provisions of law, if they do that, the employee waives the right to file a civil action against the employer if the employee has refused to receive a vaccination, either offered by the employer or otherwise made available to the employee, and the employee contracts COVID-19 in the course of their employment. So again, that's being heard next week, and we'll watch that one. House Bill 1176, this is really unique. And this is a credit against the state income tax. And it's a credit for travel, hospitality, and entertainment expenses. And I assume with us being cooped up all this time, it's encouraging people to do some travel. And yet it's also, I think, limited to the point that it's would be helping Maryland businesses. But expenses would be any expense that you pay for food and beverage, lodging expenses, other than the expense related to lodging at a vacation home that is owned by the individual. So I can't go to Ocean City and stay in my condo and say, well, I would have paid $175 or $200 a night, so I'm going to put in, it's costing me $200. You can't do that. Transportation expense is the mileage that the individual drives in their privately owned vehicle and is calculated using the privately owned vehicle reimbursement rates in effect for state employees. And I'm sure the agency will have to post that on their website or be on the application for the credit, so you'll know how to do that.
Would that follow the federal mileage rate? Does the state follow the federal?
No, it's got to be the mileage rate that state employees get reimbursed.
Okay.
Also, it would cover expenses for live entertainment and sporting events. and expenses related to attending a conference or business meeting. So I thought that one of the reasons I, included it was because of tax conferences and so forth if you travel. The qualified travel means that it occurs within the state and must be after December 31st, 2020, but before January 1, 2023. So it's going to cover 2 years, 21 and 22 calendar years.
All the more reason for people to join us at our annual convention in Ocean City this year.
Exactly.
Get a credit on their tax return for it.
Yes, but well, you've got to go through some loops. You've got to apply for the credit, and I'll get to all that in a minute.
Okay.
And also, the final destination must be at least 50 miles from the individual's principal residence. So you can't use this since you live in Ocean City. So you got to get the convention moved 50 miles away from you.
Right, exactly.
And for each taxable year, the credit allowed may not exceed the lesser of 100% of those qualified expenses I talked about, or the sum of $4,000 for an individual, or $8,000 for a married couple filing a joint return, and an amount equal to $500 multiplied by the number of dependent children that each individual would have. So if I traveled to Ocean City and I had 2 dependent children with me, I could get the $4,000 for the individual and $500 for each of them for a total of $5,000.
Wow, that's a great credit.
That is because, the subtraction modification is one thing, that's just reducing your taxable income, but this is dollar for dollar. So
Right.
Really interesting. And also the credit may not be allowed with respect to any qualified expenses for which the individual claimed under section 162A2 of the Internal Revenue Code. They have to stay separate. You can't use them for both purposes.
Sure.
And the last one I want to touch base on is Senate Bill 218. This one is really important. And I encourage all of the members to go in and review this bill. And I say that because this bill passed, it's a Senate bill, it's passed the Senate, went over to the House, and was passed by the House last Friday, the 26th. So it's going to become law. The governor is not going to sign this bill. He's going to let it become law without his signature. And when a bill passes both houses and is given to the governor while the General Assembly is in session, excluding Sundays, he has 6 days in which to give a reason why this bill is not going to be enacted. He's going to veto it.
Uh-huh.
He's not taking any action. So 6 days, excluding Sundays, after he received it, and I assumed he received it the day the House passed it, it sounds like it would become law this coming Friday without his. Now, this is a child tax credit and expansion of the earned income credit. If your members heard Comptroller Francho when he gave his presentation about getting those checks out and so forth, he spent some time talking about he was disappointed in the Relief Act because it didn't include these individuals that are here from other countries. They don't have a social security number, but they have an I-10, they're working, they're filing returns. They get no relief in the relief package. This bill addresses that and enables them to get the earned income credit and the child tax credit. I think that's the one where if they have a dependent that's 17 years or younger and has a disability, you can get a $500 credit. And this also applies to tax years 2020 through 2022. So again, if we have any preparers that have clients that meet this criteria, then this bill is going to affect their 2020 tax return.
Okay,
So those are highlights of some of the keys, and just to show the different variety that of bills that have been introduced this session.
Right.
You want to address the relief bill and start on
yeah, well,
that?
I have another question for you. Have you heard anything as to whether or not the comptroller's office is going to extend the filing deadline for Maryland tax returns yet?
I haven't seen anything. I keep
Okay.
watching. I get emails from the comptroller's office every time he puts something out. And I haven't seen anything as of this morning.
Okay, I looked this morning as well. I didn't see anything, but I didn't know if I was missing something.
Yeah, there was something came out yesterday dealing, I know there's a provision of law for farmers and fishermen. If you file your final return by March 1st, which yesterday was March 1st, you don't have to pay the last quarterly installment or on estimated taxes. And there was something that came out about interest and penalty being waived.
Right, I did see that. Well, let's talk about the relief bill, because that's
Okay.
the one that's probably affecting most of our preparers right now. You want to give us just a brief highlights of the bill?
I think the big part of it was the checks that the comptroller's office was going to be mailing to individuals based on prior tax returns and at the last known address based on the return. If they didn't have that, well, the bank account, they would be direct deposited. If they didn't have that information, then they would be mailed to the taxpayers in that respect.
Okay. When were those checks supposed to start going out?
They went out last, let me see, they should have gone out last Friday.
Last Friday, the 26th?
I want to say the 26th.
Okay,
No,
that's
I think it was the Friday before that.
okay. So most of our people should have gotten those checks by now.
Yes, absolutely.
Okay.
Uh,
And also in the Relief Act, that's where the governor wanted the Maryland unemployment to be non-taxable. So that becomes a subtraction modification as well. Is that correct?
That is correct.
All right. And is that one going to be a regular subtraction modification, or is that going to be on that new 502?
I think that becomes part of the LU form.
Okay. And as far as I know, they haven't released that form yet.
Haven't seen it.
Okay.
I'll, if I see it, I will shoot you an email, let you know it's available, so you can
Okay. Well, I would appreciate that.
put the information out there for your members.
Right. Under the pass-through entity tax,
Yes.
maybe, do you know anything that you could highlight us on that?
Well, there were actually two bills introduced, and one of them was having a hearing, and the Senate bill was scheduled for a hearing, and the zoning canceled that hearing because those bills were going to do, they actually put it into the relief package. And this was dealing with pass-through entities being able to pay the tax, but they would have to pay the tax for all members.
Not just Maryland resident members,
Exactly.
non-resident members as well.
Yes. And
Okay.
that provision was put into the relief package and became law.
Okay. The other thing is the relief package, if I'm not mistaken, also has another subtraction modification for grants that were originally scheduled to be taxable grants. And the state of Maryland has now said that those grants would follow and become non-taxable.
Correct. And that's, I think that again is part of the LU form.
Okay. Is there anything that you can think of that I've missed on this particular relief bill that our members should know about?
I guess the one that kind of ties in with that Senate Bill 218 on the earned income credit on the refundable portion. Normally, as the before this law before this bill became law, the percentage that was used for the refundable portion was 28% for a taxable year beginning after December 31, 2017.
Right.
What they've done they've increased it to 45% for taxable years beginning after December 31, 2019, but before January 1, 2023. So tax years 20, 21, and 22, the percentage is increased so that the refund will be higher. So
Okay.
that affects the returns that preparers are filing right now.
Okay. And would that also be on the LU form?
I don't think so. I'm not sure. It's going to be interesting to see what all is included on this LU form. I would think this would just be part of the normal calculation, except the percentage would change from 28% to 45%.
Okay.
The exclusion, let me see. Going back to what you had commented earlier, the amount of benefits paid to an individual in accordance with the Title 8 of the Labor Employment Article or the Unemployment Insurance Program, if the individual's federal adjusted gross income for the taxable year does not exceed $75,000 for an individual or $100,000 for a married couple filing a joint return, or an individual described as the head of household or surviving spouse, then they get that subtraction modification.
Okay. For the unemployment.
Yes,
Okay.
but you got to look at the federal
Income
adjusted.
levels. Okay.
And there was one other one dealing with sales tax about taking a credit. I can't put my finger on it. The bill was 38 pages long, so. But I think we've hit the highlights of most of it. Which
Right.
I agree with what you said. Most of it was geared to getting those checks out to 300 to individuals, 500 married couples.
Right.
There's
Well, I
other
just found the
programs.
sales tax thing that you were talking about, Jim. And it states that the vendor has to file a timely sales and use tax return, that the gross amount of sales and the tax that the vendor is required to pay with the return does not exceed $6,000. The amount of the sales and use tax collected during the month for which the vendor qualifies for the credit of this subsection or $3,000.
Correct.
So it's a $3,000 a month credit that they get for 3 months. So that's $9,000. That's
Exactly.
that's a nice credit to get.
Big chunk of change.
Yes,
And
it is.
obviously will help many vendors that are hurting,
Yeah.
or businesses, not vendors.
So if any of our members are preparing sales tax returns, make sure you take a look at this relief act for the sales tax credit for your clients.
Correct. Other than that, I think that's the meat of it anyway.
All right. And we'll be getting together again in another couple of weeks to go over one last final legislative session wrap up. To see
Correct.
if there's any bills that we need to be on, keeping our eyes out. And if anything comes along in our weekly meetings, I'll be passing those along as well to our members on the e-weekly newsletter, that things that they need to be keeping their head up for.
Yes, and I'm also picking bills and providing Naval with that information
Okay,
for an e-weekly.
okay, very good. Well, thank you very much. Jim, it's always a pleasure to talk with you. We appreciate the hard work that you put forth for the society, and let us know if there's anything that we can do for you.
I appreciate the kind words and enjoy working with you all. It's a great group.
Yep, it certainly is. All right, well, thank you very much, Jim. You have a good week.
Thanks. You too now.
Yep, bye.
Bye.